Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS podcast. What I want to take you through today is an update of issues affecting accountants and bookkeepers that I think you should be made aware of. And if you want to have further discussions with us, of course, you can please contact me. Tradie charge-out rate calculator, absolute gold. This was the enthusiastic endorsement given to the ESS BIZTOOLS trades charge-out rate calculator by Amanda Gascoigne, a very experienced chartered accountant who these days is a accountancy industry mentor and coach, helping hundreds of firms around Australia to deliver a great service, but also to earn an attractive income for your own endeavours. Amanda indicated that she'd had a good look at the ESS BIZTOOLS tradie charge-out rate calculator, and indeed she has. Over a number of years that Amanda has been an affiliate of ESS BIZTOOLS. She indicated that every accountancy firm has some tradie clients and that there are significant opportunities to assist those operators to improve their businesses by proactively advising them on the calculation of charge-out rates, not having them just copy a competitor's or picking up bits of information around a club or a pub and then using those charge-out rates without any appreciation of the individual productivity figures being achieved or the costs that other business might have had. There's a whole lot of other variables. And also, what's the policy on markups of purchases that the trades business has made for one of their clients? Are they going to mark up those activities at all? Or what is the percentage? Or is it just higgledy-piggledy? I think there should be a process put in place whereby if they purchase goods for a client and gone to the trouble of buying those goods, having someone spend the time doing that, and then paying with their own credit card or finance from their own bank, and then ultimately getting paid by the client. That's an outlay. So they might decide they're going to mark up those items by 15% or 20% to cover their time and outlays. We need to know the overhead expenses of the business so that the charge-out rate can be determined, and that's going to be a rate for each individual classification of team member within the business, or perhaps even on an individual basis if there's great variables. But the key to that is not just leaving it then for 12 months. I think the great system is that you talk to the client and you say, well, we're now going to prepare monthly financial accounts, and we're going to analyse your productivity percentages for your team members. We'll produce you a report, a key performance indicator summary on what the actual percentage charged out was, and compare that back to what the budget estimate that's been included in the trades charge-out rate calculator was set at. And if there's variations that the owner or the managing director of the business accepts as being reasonable, it may be necessary to update the charge rate calculator. For argument's sake, if someone's been set for 80% productivity and it's found that because they've been allocated other duties, more of a supervisionary matter, that their actual productivity is only going to be about 68%. Well, I think we should be redoing the charge-out rate calculator. We can't go back and recover what's already been lost, but we can try to influence what's going to happen in the future. Of course, if the trades businesses entered into long-term contracts with customers, they're stuck on whatever the charge-out rates they used in those calculations. but at least your client will have an understanding of what the processes are. One of our subscribers within ESS BizTools now has 110 tradie businesses that he is using the ESS BizTools Trades Charge Out Rate Calculator with every year. And then periodically during the year, they reassess based on the key performance indicators, which are telling them what the productivity has actually been for individual team members. When he first joined ESS BizTools, he had told us that he had 10 tradie clients, but heard that we had the charge out calculator and wanted to use it with his clients. He's now got 110. And he's told me that he's now charging these 110 clients about an extra $8,000 over and above what he was charging for the traditional compliance services, annual set of accounts and an income tax return. So he's really generating a great business activity, isn't he, from offering tradie services? How many tradie clients does your firm have? And on my calculations, there's at least 150 different types of tradie businesses operating in Australia. You may have more tradie clients than what you think you have. And basically, it's any type of business that's selling their time and getting paid for their time, plus a margin on the purchases that they may be purchasing for the client or that they have to supply in the business. That's worth looking at, isn't it? And the sister product to that one is the professional services firm charge out rate calculator, which is basically the same as the tradies charge out rate calculator, but it hasn't got built into it the ability to add a markup percentage on direct purchases made for clients. Now, you could use the trades charge out rate calculator if you wish for professional service firms who are doing that, so that you can reflect that in what they're doing. So if you put professional service firms, which are architects, accountants, solicitors, physiotherapists, podiatrists, all sorts of businesses are under the professional services category. Put them together with tradie businesses, I'm sure you may find that a significant percentage of your clients, in fact, fit into those categories. How do those people set their charge out rates? And do they receive regular financial accounts during the year? I think this is an opportunity for you to look at and think about and talk to your clients and move on and help them run better businesses. And in these challenging times that we currently have, high inflation, high interest rates, businesses failing, I think we need to be doing as much as we can to help the clients that we've got to succeed in business, help them to grow and become stronger, and they'll be very loyal clients for you. Let's move on and look at some of the other issues that are confronting accountancy firms. The Australian Small Business and Family Enterprise Ombudsman, Mr. Bruce Bilson, has announced that his organisation, which is funded by the federal government but acts independently, I'm assured, by him and Kate Carnell, who was the former Small Business Ombudsman, has released a report that he's called the Small Business Pulse. If you haven't read it, please find it and read it. It contains some very interesting information. A lot of it I think you should be sharing with your clients, writing to them and pointing all this out, maybe giving it to them in installments, because it's a fairly long read. They mightn't want to read the whole lot. But Mr. Bilson has highlighted some very disturbing details. Small business conditions have deteriorated by 3.5% in the last 12 months, and that continues a trend that's been evident for the last couple of years. These tough conditions are affecting optimism, with fewer people considering starting a business. Now, fewer people considering starting a business might be a good thing if they haven't been properly advised at the very beginning. And I'm going to make more comments about that a little later. Bilson also indicated that the tax office is in hot pursuit of tax debt. We all know that during the COVID crisis, the government of the day instructed the tax office to back off, which they did. And but now there's a lot of money apparently owed by SMEs. So please warn your clients that they really need to give this serious consideration and work out how they're going to pay whatever tax debts that they have. Bruce Bilson also has outlined some worrying statistics when he indicated that small business is currently 33% of GDP. Now, when you first read that and think about it, you might say, well, isn't that wonderful? Small business is 33% of GDP. But do you know only 8 years ago in 2006, it was 40% of GDP? So it's slipping. And small businesses provide 42% of the private sector workforce. 42%. But in 2006, that figure was 53%. So small businesses' size is slipping. Even though we get told there's over 2 million small businesses, a lot of them are extremely small. And some operators have more than one business name registered or even companies registered. And that tends to get counted as 2 or 3, where really it's only one business. So please read Mr. Bilson's comments. He is the former small business minister in the last Liberal government. So this man knows a lot about small businesses. And I think the accountants should be very much aware of what the Ombudsman does, what his department does, and keep in contact with him. And it's not just Bruce Bilson on his own. I understand there's a staff of 20-odd people who are doing all sorts of research. So if you need details that have been examined by someone that's generally on our side in advising businesses, please contact him. And if you can't find the material that I'm referring to, please contact me, Peter at ESS BIZTOOLS, and I'll send it out to you. Do you know it's 2 years since the then Tax Commissioner, Chris Jordan, issued his warning at Xerocon 2022? Sure, time flies, doesn't it? You must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years' time. So change those figures now to 1 to 3 years' time. The Tax Commissioner went on to say, please advise your clients on business survival matters. Become a trusting key advisor to your clients. If anyone ever gave a warning to accountants and bookkeepers to make sure that you look at diversifying your services, Mr. Jordan definitely gave it to you that day. And he continued it later on with further follow-on comments. Now, Chris Jordan is now retired. So we now have a new tax commissioner, of course. But the tax office is sticking to his comments. And incidentally, Mr. Jordan was a former partner of a major accounting firm, so he understood the accounting industry. He might not have actually been in the smaller end of the market, but he understood it, probably more so than any previous tax commissioner, because as far as I know, he was the first tax commissioner recruited from outside the tax office. Now, all of this is highlighting the difficult circumstances that SMEs are operating in, but also accountants and bookkeepers because the small business market is shrinking. It's under more problems with business failures, high interest rates, high inflation. What are you going to do about it? What services are you going to offer? And a few weeks ago, we reported on fiscal management issues that come to light from the MYOB survey when their CEO, Paul Robson, commented on some of the results that they found from the survey that they had undertaken. Let's just go back through some of those. He said that people were going into business without getting proper accounting advice. Or if they were getting accounting advice, I think Mr. Robson was being very critical of that advice. It shouldn't be just out of a textbook. So let's just go through and analyse what I think Mr. Robson's report means to the accounting and bookkeeping profession. It gives you some basis to work on when someone comes to talk to you. You're going to start a business. Well, let's sit down and we'll go through what's involved and we'll really analyse how much money you need to go into business. And if they haven't got enough money, I think we need to have the courage of our convictions to tell them they haven't got enough money and they should go back and continue to work wherever they're currently working for another 12 months and try to build up their equity to put into the business. Because what Mr. Robson highlighted was many people were starting businesses thinking they had enough money, then after 6 months they're running into a brick wall. Why? They hadn't thought about suppliers' terms of trade. They probably assumed that every supplier was going to give them 30 days credit. There's no obligation for any supplier to give any credit. And what they obviously run into was suppliers getting sick and tired of problems with small businesses not paying bills. And they were looking for cash up front or cash with the order, payment, or even payment on a 7-day basis or a 14-day basis, not a 30-day basis. So that was one of the first problems that these SMEs are running into, is not understanding suppliers' payment terms. The second issue that he really highlighted was these businesses did not understand credit. Now, in the first instance, my first comment is if your client doesn't have to give credit to make a sale, don't encourage them to do so. But obviously, there's many businesses that have got to give credit. And in doing so, they need to make sure they've got a proper system. Now, the vast majority of people going into business are going to need an accountant's or bookkeeper's assistance to set up a proper debtor system, to make sure that they've got some details on who their new credit customer is. They've checked the credit references. They've checked their background. Are they getting someone else's problem? That a terms of trade letter is prepared and submitted to the new customer and they sign it. And a retention of title agreement if your client's supplying those sort of services and the new customer signs it. And that a decision is made within your business, your client's business, as to whether there should be a registration made for this new customer on the Personal Property Securities Register. This is important. And most people starting off in business don't really understand any of this. You need to be giving them that advice. And the other problem that I think Mr. Robson was referring to when he said they run out of money was that there seems to be an understanding by some people, or belief by some people, that everyone pays on a 30-day basis. Nothing could be further from the truth. Australia 3 or 4 years ago won an international award, the most dubious award I've ever heard Australia winning. And that was that we had the highest debtors' days outstanding in the world. Nothing to be proud about. And I don't think it's changed much. We've had a couple of prime ministers, both sides of the political divide, say the government departments are going to pay within 30 days, and they've tried to criticise big businesses that haven't paid in 30 days when government departments traditionally have been one of the worst. And I think a lot of businesses are still having trouble getting paid. I recently saw a business that showed me theirs, and it worked out 102 days. Very difficult to survive when your debtors are outstanding for that length of time. So your clients need to make sure they have an operational debtor system installed, which will help them in their business activities. So what do businesses need? Someone rang me the other day and said, okay, Peter, what do businesses need? I said, I'm writing an article on that, but I'll give you an overview now, as I'm going to give you. Every business should have a business plan, and not straight out of a textbook, not written by someone that's never worked in the trenches with business operators. And please don't you, as the accountant or bookkeeper, just go up and write it yourself. That's not what we mean. The business plan needs to be coordinated with the client, and if the client has a leadership team, with the leadership team. Because at the end of the day, it's their business plan. They have to implement it. Not you, not me. They have to implement it. I've prepared hundreds of business plans over the years, and the most successful ones are the ones that the team enthusiastically got involved, that had great debates with me about some of my interpretations of what they have said. And that's great, because at the end of the day, they are the team that has to make it work. Even if you're offering a virtual chief financial officer service to your client, which I hope you're planning to do or already doing so, you're not the only one in the leadership team. The others have to accept their share of the responsibility to make it all work. So you need to have their ownership of this document. Nearly get them swearing on it, that this is their business plan. And one of the key things there, first of all, I think, is the due diligence review. You need to know more about your clients than what you know if your previous arrangements have been the preparation of an annual set of accounts and a tax return. I think you should know the client 1 inch wide but a mile deep. And that's a lot more knowledge than what most of you will have on most of your clients. Because for an income tax return, it's a set of financial accounts and a tax return that's prepared. Do you know anything about how your client decides who to give credit to, what the processes are with registering on the Personal Property Securities Register, what the debtors follow-up system is? Are they monitoring debtors' days outstanding? How do they purchase their supplies? Where are they getting their supplies from? What risks are been incurred? What are the risks within this business? Have they thought about any strategies and policies? And it goes on. You need to know your clients a lot more intimately, because whether you're just running what we might call an accountancy service as an accountancy firm supplying some more information to your clients, or the virtual chief financial officer service, which is what I hope you're signing on for, you need to know a lot more, because if you were the chief financial officer of a company, you definitely would know more. I was a chief financial officer and company secretary of a listed public company. We were in the meat industry. We're Australia's second largest meat group. I didn't know much about the meat industry when I joined. In fact, I probably only knew what a rump steak tasted like. So I had to get involved by going to our meatworks and observing what happened. We had 4 major meatworks. We had 300-odd retail butcher shops around the country. We had other activities, small goods, cold stores. You need to understand what your client's business is all about, so that if someone rings you up and starts talking about an event that's taking place at a certain location, you can visualize it. You know it. You know what the systems are. That way you can become a vital advisor to your clients. We need predictive accounting reports, budgets, key performance indicators, key indicators, and projected balance sheets are vital. And this is the financial interpretation of the business plan. To be able to sit down with your client and the leadership team and say, well, if you do what you've said you're going to do, this is what the financial performance will look like. This is what your tax is going to be. This is your cash flow position. And this is what the balance sheet should look like in 3 years' time. Now, are you happy with that? And if they're not happy, you say, well, what are we going to do about it to fix it? But then you have got a standard that each month you're comparing back to. We're on target or we're not on target. We're 4% behind, 6% behind. What are we going to do to catch up? That's the role. And that way you become a vital person to help them. They need daily reports. Someone said to me the other day, in fact, it was Amanda Gascoigne in that webinar we jointly did, 25 years ago, everyone did daily reports. But these days, according to Amanda, everyone relies on the computer to tell them things. Well, some things don't come out of computers. People haven't really had time to compile them. So what's someone new need on a daily basis, the business operator? I think the key things are all around financial matters. What's the bank balance? What's the debtor's balance? What's the debtor's days outstanding? Have they had a problem with a major account that didn't pay the day before? Were they due to pay and they didn't pay? What debts have got to get paid in the next 7 days? That can be a bit of a wake-up call to the leadership team, I can assure you. What was the gross profit percentage yesterday? What was the average sale? What was the boning room yield? And every one of your clients will have their own key performance indicators or metrics that they know about, they need to make sure it's getting sent back to them. Now, I'm not suggesting that the accounting firm sets that up and then operates that system day by day. You train someone within the client's firm to do it. Make sure you're on the distribution list of the report, though, so you can make sure it's been done. Have someone tick it off and read it. And if it looks like a huge problem, gross profit percentage was expected to be 42% and it was only 29%, hit the alarm bells. Get onto the phone. What went wrong? Who's investigated this? And you might get told, oh, yeah, well, we found a problem. We forgot 40 grand's worth of stock. And that obviously affected the gross profit percentage calculation or whatever. What it shows the general workforce and the management that the systems are working. If there's something that's a deviation from what was expected, there's a reaction. This is what happens in big businesses. And probably the most important function at all then is on a weekly basis. The big end of town prepare weekly performance and profitability reports for their businesses when they're scattered all over the country. I think that's what you should be doing. Now, you might not have clients scattered all over the countryside, but wherever they are, they get a result. Over the years, I've become aware of the Woolworths system and the Coles system, and I did work consulting to some IGA stores. They're all calculating their results for the 30 or 45 departments that they've got on a weekly basis, so that Monday afternoon, Tuesday morning, they can have a post-mortem on what happened last week and fix problems. If there was an expectation of a certain gross profit percentage in the bread department and it wasn't created, they need to find out why and fix it. Not wait until the end of the financial year and some months after the end of the financial year that traditionally someone prepares their annual accounts and tax return and then tells them, geez, your gross profit percentage in your bakery fell a lot this year. There could have been a continual problem that no one noticed because it wasn't getting put in front of them as a report. That's the benefit of what all these systems are about. And then we have the monthly financial accounts and key performance indicators. which is the next row of checking. We've got the weekly performance report. We've got the monthly financial reports. We know that we're on track. We've got comparisons to budget. Ladies and gentlemen, that's the system that I think accountants need to be advocating in 2024 to our clients to assist them to survive this business jungle that we all work in. They are definitely looking to accountants to supply a broader range of service than what many firms have been providing over recent years. If you want to talk to me about the services that ESS BIZTOOLS supplies to assist accountants and bookkeepers like you all over Australia, we've got subscribers, to offer these types of services, please send me an email, peter@essbiztools.com.au, and we'll get back to you and set up a complimentary 40-minute Zoom webinar. We'll record it for you, so you get the recording, you can analyze it. You can tell me what your firm's strategies are, and I'll tell you how ESS BIZTOOLS could contribute, if there is still room there for us to contribute. If there's not, I'll be honest and say to you, you've already got a great system, just use it. Thank you for listening. Have a great day. Goodbye.